Good morning, folks, and welcome to this week's edition of the Satori Traders Precious Metals News. This is our 15th edition, and hopefully you are enjoying it. If you have any feedback or anything you'd like to see in the newsletter, please let us know. We'll accommodate any requests that makes sense. And so let's kick it right in. The big news this week is in silver. And so the Reddit crowd, that's an online forum, they've been chasing GameStop and a number of other highly shorted stocks this week and have created some excitement in the market. And it appears that on Thursday and Friday, that group of individuals has turned their attention to silver, specifically mentioning SLV as a target and AG, First Majestic Silver, as a stock. And so those two vehicles specifically mentioned in Reddit forums. We can see here, this is SLV on the cover. Let's go look at the real chart. The activity Thursday and Friday drove volume. That's about 5 times average volume, and you can see that it, big gap up off of support, had support at the 50 and the lower median line of this shift fork. Big gap Thursday, and then Friday not only pushed over the median line of this fork, but pushed solidly into this long-term support resistance zone, 25 to 26. We go back, this is the 2011, this is the top of the 2011 bull market up here. And we can see that both on the way up and on the way down, 25, 26 provided support here and then became resistance. And so now silver, or SLV, is dealing with that area as resistance. New MACD buy signal, energy rising. We have to be careful at this point because we don't know how much of this demand is from investors and how much is from speculators. So we have to consider that the Reddit crowd, that's hot money that may not hang around for long. So let's pop over, let's look at AG since I mentioned it as well. We can see we're in the daily time frame here. Large volume on Thursday and Friday, but note that it's showing up as red volume, which indicates selling. So interesting contrast with this highly bullish move, but the volume is showing up as selling volume. And of course, First Majestic is a highly shorted silver stock. But that's a 21% gain on Thursday and followed up with another 7.5% on Friday. So that's a significant move in First Majestic stock. I wouldn't want to have been short First Majestic last week. And so we have Eloro Resources. This is a junior silver miner, and they had some outstanding drill results last week, and obviously we can see that the stock reacted quite strongly to that press release. Now, this behavior, there's at least two things to talk about with this kind of behavior. One, if you weren't in this stock already, you missed that move last week. And so, the stock almost doubled in a week. And in the last 2 weeks, it has more than doubled in the last 2 weeks. And so if you weren't in this stock, you missed that move. Now, the danger of that, or the downside of that, is that, well, now you think that this stock it's made its move and it's become expensive. And so you pass on this stock and you go look for something that's cheap. Well, I played that game in the rally that ended the bull market that ended in 2011. That was one of the mistakes that I made, was to sell a stock like this because it made its move, and then I wouldn't rebuy it because now it's expensive. And I got to the end of the bull market with a portfolio full of dog stocks that hadn't moved. I made money along the way, but as far as taking advantage of that bull market, I didn't do a very good job of it. So not going to make that mistake this time around. So that's number one. You have to be in these, the best junior mining stocks, you have to be in them before they move, or they're going to do this on you, and you're going to have a hard time buying them after they've done this kind of move. And now the second point, don't chase a stock once it's done this. I'm not saying go out and buy Eloro. That's not at all what I'm saying. We want to be in Eloro. We want to have Eloro in our portfolio, but we don't want to buy it foolish. And so as conservative investors, we want to look for a pullback. It'll happen at some point. Now it may be that the pullback we're going to run up somewhere and then pull back. It may be at $6. Maybe buying Eloro at $6, which doesn't make any sense when you're sitting here looking at it 447. But I wouldn't buy that. Don't buy a pogo stick. I had a pogo stick as a kid. It was a lot of fun, but don't buy stocks that look like pogo. Enough said. Let's move on. So as an alternative to Eloro, here's Quia Silver. Now, this is an emerging silver producer. They're targeting 2022, and no reason to expect that they're not going to hit this. Kuya bought a past producing high-grade silver mine. The mine was in production up until 2016. The family that owned the mine privately, it was never public, they were mining just enough ore to keep themselves supplied with money. Never really did anything with the property. Well, Kuya's coming in and they're mining the property aggressively. They're exploring the property with modern scientific techniques, and they're building an on-site processing plant so they don't have to truck the ore to a mill, which that's what the private family was doing. They're just trucking the high-grade ore to a mill, collect their payday, and be done with it. So anyway, as an alternative to Eloro, I would suggest that Quia Silver is a better investment at this point if you need to add exposure to silver mine. We looked at First Majestic. Now we're into gold. So last week I had drawn this new, last week I had it as a mod shift pitchfork, tentative pitchfork. And then as the week unfolded, it became obvious that the shift pitchfork, as we see here, is doing a better job of describing this price action. So we can see price finding support. That's Wednesday and Thursday, price finding support right on the lower median line of that shift fork. And so just be aware that that fork changed this week, appears to be doing a very nice job of describing the price action. Let's zoom in and look at that price action. So this is the top of that downtrending channel. This is our 5-month long correction now. And so, gold is trying to break above that channel. So now the long whiskers on these two candlesticks are not bullish, actually kind of bearish, but we have to keep in mind what's going on at this particular juncture in the market. We've got sellers coming in and they recognize this as a resistance area, and so they're selling the heck out of this level, trying to keep gold from starting its next up leg. And then, of course, buyers recognize we're sitting here on strong support, 200-day moving average. Buyers they're ready to push this thing higher. And so I'm not going to take those as bearish. I think this is just indicative of a battle currently being waged between buyers and sellers. And of course, the silver, hard to imagine that if the Reddit crowd can actually short squeeze silver, it's hard to imagine silver getting excited without gold following suit. So we'll see. So here's silver in the daily time frame. Obviously, we can see there's Thursday and Friday. I think, 5% and another 1.6%. So two big moves there. In last week's letter, I'd pointed out that this 2750 seemed like a likely target for a spike high. And of course, didn't really think it would happen that week. I guess I pointed out that it might happen. Anyway, it did. And now, if price can push decisively above that 2750 level, then 29 becomes almost a given as the next target. And so we'll see if the Reddit folks can keep pushing silver. We'll probably hit hit 29 Monday or Sunday night. And the mining stocks, so I keep showing you this messy chart. I'm convinced that these two forks, so we've got this red, this is a mod shift downtrending red fork, this is a Andrews, the blue fork is an Andrews. We can see that price is still reacting at these median lines, and so I'm still convinced that these are the current valid fork for GDXJ. It's just that the market's choppy. This market is choppy right now. And so in last week's action, GDXJ came down and knocked out this November low by 9 cents. Now each analyst and individual investor has to decide how they want to treat that. Now, you treat that as that low's been violated, or you can note that as a data point and continue with your analysis. After you've done a lot of charting, spent a lot of time in the markets, you'll experience what I call chart painting. Basically, it's a whale or whales, market makers. They're able to move the markets when it makes sense for them to do so. Let's look at SIL, more obvious picture in SIL. So here in SIL, we have this, it was an obvious confluence of support here. We got the 200-day moving average. We've got a horizontal support resistance level that was obviously providing support. And then we get in my opinion, this is an example of painting the charts. Painting the charts, running the stops, they accomplish the same thing. The market makers and the whales, they know that traders and traders more than investors, they're putting their stops right under this confluence of support because, in a normal, air quotes around normal, what is normal these days? In a normal market, you could put your stop there and that would be a good place for a stop. But the whales and the market makers, they know that that's where you're going to put your stop. And so they intentionally run the market. They run those stops. They push the market down through those stops. They buy up these shares cheap because your stop loss order gets triggered. You're selling at the market. They're going to take them at the market. And then, of course, they're going to reverse the market and run it higher. And, of course, they don't have to reverse it. That's the way the market wanted to go anyway. That's the primary trend. That was the unnatural move here. This was an intentional manipulation by some entity with enough trading power to push SIL below that confluence of support. And of course, we can see right there that the market wanted to go up and did. So let's go back. We were looking at, that's the gold. We looked at silver, GDX. Let's keep moving. So this is GDX. We were looking at GDXJ, the junior ETF. This is GDX, the senior ETF. And we can see that we still have a higher low. And of course, pointing out that we still have a higher low, now the market makers and whales are likely to target. They'll target that low. They'll paint this chart if they're able to take out that low as well. Let's see. So when we have, or at least for me, when the market is confusing to me in whatever time scale I'm looking at, my tendency is to pop out to a higher time frame and try to get a grasp of the big picture. And so that's what I've done here in GDX. This is a monthly time frame. And what we want to notice here is that GDX broke out, what's that? That's May of 20. So in May of 20, GDX broke above this multi-year support resistance level, ran up higher, and now in our 5-month pullback, all it's doing is testing the breakout level. And notice it's finding support there. Buyers are coming in. That's why we've got these long lower tail, or well, they're not long, but that's why we have these lower tails on these candles. Those are buyers coming in here at support and buying. They recognize that's a buy point. And so anyway, focus on the big picture here. GDX is finding support at the breakout level, testing support at the breakout level. Its next target, in my opinion, is all the way up here at 55, back up here at this prior high. And so, yeah, this isn't not much fun being down here in correction mode. It's going to be a lot of fun up here. I'll be ringing the cash register. See, and so we looked at still potential bottoming action here, you know, MACD hinting at a bottom, stochastics turning up. Again, all things silver we need to take with a grain of salt this week because of the Reddit crowd and that influence. Hard to judge what that influence might do. Let's see, and so this is the dollar in the daily time frame. So we can see that, you know, that's Wednesday. So Wednesday, the dollar, you know, pushed into the 50-day moving average, closed just a touch above that average. But then on Thursday, you know, tried to push higher and actually got pushed back down below the 50 and below the median line of this fork. Friday's action, you know, doji on top of the 50, on top of the median line, perhaps bullish. You know, MACD is trying to get into bull mode. If we can get both indicator lines above zero, that's bull mode, which would suggest that the primary trend is up. Right now, this is, I'd call the trend in the dollar undecided, certainly in this time frame. Could break in either direction. We're due for a rally, a relief rally. Dollar's been in a downtrend for long enough, but there are a lot of influences on the dollar at this point. Janet Yellen, Joe Biden. See, interest rates last week, obviously we had a pretty substantial pullback, but notice that all it was a pullback. So it's pullback to the 1% level. That was a breakout. Pull back to the breakout, tested support successfully and bounced higher. And I would point out bounced strongly higher. That's not a tepid, that's not a lukewarm move higher on that rebound. That's a, yeah, can't really call it wide ranging, but that is a large bullish candle, a gap open on the next day, and then another bullish candle that's climbed above that median line of this mod shift fork. So anyway, long-term trend in interest rates is up at this point. Oh, and I didn't show the chart. I went and grabbed it from last week. So let's go look at this is the monthly TNX. So in the monthly time, or I'm sorry, it's the weekly. In the weekly time frame, clear that we have a target at 1.5%. Without outside influences, the yield on the 10-year note is headed to 1.5%. Will the Fed and the Treasury allow that to happen? That's a question that you and I can't answer, folks, and so we won't try. But anyway, in my opinion, 1.5% is the target, which will be hit in interest rates without outside influences. And let's look, now we're into the equities. And so I was looking at, you know, again, when the action's confusing in the lower time scales, pop out to higher time frames. And so I'm looking here at the monthly S&P 500, and notice that back in, this is January of 20, and then February of 20, and then that's the big scary plunge in March. Well, what I'm noticing in this chart is that price reached this median line extension and could not rise above it, and then fell back. And so here we are at the next median line extension, and we've already got a spike into that level, and buyers were unable to push the markets above that level, and sellers were able to push price back down from that level. And so I'm just noting here that running into that median line extension preceded the big scary plunge, And here we are at the next median line extension in SPX. This is SPX in the daily time frame. The Feds came out last week and they said, hey, no changes. We're going to keep doing what we've been doing, which is $80 billion a month in bond purchases and $40 billion a month in mortgage-backed asset purchases. So Fed's going to continue with zero interest rates and $120 billion a month. Think about that, folks. $120 billion a month being pumped into the markets like that's normal somehow. But anyway, even after the Feds announced that they were going to continue status quo, that wasn't enough for the equity markets, and I think we got about a 2.5% pullback across the board. Obviously, SPX has penetrated the bottom of this. We had this price channel going for a number of months. That's clearly been penetrated now. 20-day moving average was acting as support somewhat. That's broken. We're sitting now on the 50, which is another potential support level, and we'll just have to see this coming week whether that's able to hold the market. The next significant support is down there. Let's see, in the Dow, same thing, break below a support level, break below the 50 in the Dow, sitting on support at this upper median line. Again, this support doesn't hold. Next support zone is in here, but I would note that we have an open gap immediately below this potential support zone. And so I think if price actually gets down here, we'll fill that gap, which would give us, we're essentially down here we're down at the median line of this pitchfork. So that would be my concern in the Dow, is that if this support doesn't hold, we could very quickly find ourselves down. What's that, 1,100 points? 1,100 points lower. Nasdaq continues to be more bullish. It's been more bullish for months and continues to be so. We can see, last week it was breaking out above the top of this channel, but obviously ran into resistance at the median line extension of this, that's a mod shift fork. Dropped back into the channel. It's kind of playing with support along the bottom of the channel and the upper median line of that mod shift fork. So we'll see what happens, whether that support holds and we get a bounce, or whether Nasdaq's going to continue lower. Support down here. So Brent, there's nothing really to report here, but what I want to point out is that markets don't like indecision. They don't like to stagnate. And so if traders can't push this thing higher, they're either going to push it lower to make a buck, or they're going to move to other markets that are moving. And so very unlikely that this market is going to sit here sideways like that for long. And after a multi-month rally, we're due for at least a correction. So I'd be watching this thing for a pullback, and we may be seeing some weakness at the end of the week where we see Friday's candle dropping through the 20-day moving average. We can see that the 20 was providing support, and that looks like it's starting to fail on Friday. MACD's in sell, stochastic's dropping. So it'd be surprising to see lower prices in Brent. 50-day moving average seems like an obvious target there. So that's all I got for you this week, folks. Enjoy the rest of your weekend. Have a fantastic week. Happy trading. See you next time.